delighted to welcome my partner in crime in this endeavour, Mr. Ian Lewis, who is the Executive Director of the Thames Estuary Growth Board and our lead on hydrogen, who is going to be wearing a couple of hats today. Unfortunately, our representative from the Freeport has had a bit of an injury, so Ian is stepping in her place. He's going to talk about both the Thames Estuary Growth Board perspective and what's going on in the Freeport around hydrogen innovation. And I'm also delighted to have David Woods from the British Business Bank. David has such a cool job because he gets to go around asking SMEs what it is that they need to access finance, to grow, and what it is that the British Business Bank can do to help them do that. So thank you very much for joining us today. I want to start with a bit of a controversial question, if that's okay, Ian. And that is, we talked about how important living labs are to address the levelling up agenda. And my sense is that most people in government don't realise that 7 of the most deprived boroughs in the whole country are in the Thames Estuary, because they keep talking about how we have to invest in the north instead of investing in the southeast with all of its opportunities. Do you think the Living Lab idea as a concept and the idea that it needs to be here in the estuary is landing in government? Do they understand the opportunity?
Yes, is the short answer. We've had some really positive conversations recently, as recently as last week actually, with one of the Levelling Up ministers. We have 21 local authority areas in the estuary. 7 of them are in the top priority for levelling up. So if you think about that nationally, if you think about that in the context of the southeast sort of masks the true economy of the Thames Estuary and a true position of the Thames Estuary, because it gets masked by the leafier parts of Surrey and so on and so forth. What you've got here is many boroughs which have worse outcomes and lower output rates than many number of equivalent areas up north. So what we're trying to do here is really paint that really clear picture that if you invest here on the doorstep of London, you're more likely to get that return on investment, because basically the investors are just down there and they can see what they're investing in. But you're more likely to get that delivered here in the Thames Estuary than you are anywhere else. Equally, we do have that duty to level up our communities. So clearly we've got, I think there's some small areas that are actually in the lowest 10% nationally for deprivation, or highest, whichever way you look at that. We've got to address that, and by achieving net zero, by creating high value new opportunities, but also other opportunities throughout that value chain as well, we can start to bring prosperity to those different areas through the creation of this economy. But also equally, the other important thing we need to do is make sure people's skills actually flow and follow the changes in technology as they go. So we can't let people's skills become obsolete over time. We've got to make sure that stays current as technology progresses. And the session after lunch will really start to go into that in some detail.
And so what do you think the role of government is in terms of actually enabling a living lab and the capital investment that's required, as well as the company level investment that's required to create success?
We've been targeting, as Kate mentioned earlier, we start with the private sector. We've started with private sector on this as well, in terms of trying to find what types of companies would want to invest in a living lab facility, because clearly for them, any innovation that comes out of that could be hugely profitable in the future. So what we need government to do is actually come alongside us in this and actually contribute as a cornerstone investor, or help us create a fund so we can actually crowd in investment as a platform level, rather than asking them to come in and invest in individual projects or products. We want them to come in at a platform level so they can actually engage, see the upsides from spreading that investment risk over a number of different opportunities, but also that widens out the chances of those startup companies being able to access that finance, because they're not having that one-on-one conversation with a single investor, which is quite difficult. They're having a conversation with a fund whose job it is to actually encourage that decarbonisation and that transition to net zero.
Incredibly exciting. David, maybe if I can turn to you. How does the British Business Bank look at the hydrogen opportunity? Because so much of the investment that's required is actually not necessarily going to be in the growth of the tech itself. It's going to be in the conversion of businesses to be able to use that tech and the investment that's required from that side of the equation. How do you look at the hydrogen opportunity as a bank?
Okay. So as context, we're owned by government, but we run independently of, so we're the Economic Development Bank. So we're interested in the journey and the transition to net zero for SMEs as a whole, not specifically on a hydrogen or whichever topic. We looked last quarter, or quarter four, at what SMEs actually knew and what they needed. So did they know where to go? Did they know who to ask? Could they get any finance? And that became the baseline for a report we published, which then went back to Treasury, and we've used that to try and work out what we need to target. The biggest issue for SMEs generally seems to be about where to go for advice to start.
They don't even know what to do. They don't know. So that conveyor belt idea, they're just not even on a conveyor belt. They don't no touch points at all for.
So we surveyed 1,200 companies, 150 odd intermediaries, and 60-something% of them didn't know where to start. And
of those entities, where do they sit in terms of the growth journey? Are they at the very early stages of idea creation, first couple of years of startup? Are they at the stage where they've maybe taken on an investor and they've started on the journey towards revenue growth, or are they more mature businesses, or does it apply to all of them?
It's a whole spread across all sides, all the whole scale of it. It's tricky. So the bank isn't the first funder. We're the secondary funder. So we put money into the markets to then be delivered by delivery partners to the end user. So we know that there are things that need to be done, but some of it we can't do. It needs to be done by delivery partners and by private money on its own.
So does that mean you're always engaging with, the high street banks, the big infrastructure funds, the big names in the market that are saying that they're very interested in investing in hydrogen, and trying to crowd them in through the structures that you offer?
Yeah, I mean, some of it, so the team that I sit in, there's 13 of us. We each have about 200 intermediaries, so banks, brokers, VCs, universities, accelerators. And we take the data that we get from them, and then we overlay it and we create a picture and we get a map. And from that we can work out where the problems actually are. So we have 220 delivery partners spread across the big banks, VCs, angels, smaller lenders. And some of the data we get, we use it as a kind of a guide and say, look, we can see there's a problem in the market. If we can give you more data, we have a look at it. And sometimes they do, and sometimes they don't. And when they don't, then if we can't get another way to fix the problem, we'll create a fund and get the fund to fix the problem that we found.
Right. And so when you talk to that really diverse range of investors, what are they telling you about hydrogen opportunities? What is the golden opportunity from there? If only a project like this, if only a company was doing that, if only it was at this stage of development, what are they saying to you they want to see?
So the equity, it's more an equity-focused piece than a debt-focused piece. So the equity funds are after a return. Some of them are more socially impact-focused, some of them are more green tech-focused, but they need something tangible. And historically, the problem's been the length of scale, whether it's patient capital, which the VC funds don't tend to do particularly well. So I think it's probably more, as it's been mentioned already, it's about the proof of concept. It's actually something tangible. You can say, well, you can put the money in here and you can actually get your money out in 5 years.
Right, so it's that first commercial scale project that's got a well-structured revenue stream, a visibility of cash flow. Yep. They're looking for that in an ideal world.
There's a very well-known high street entity that I've dealt with who has a fund of money assigned for purposes like this, but they need something to satisfy the underwriters so that because what they're basically saying is if it goes wrong with the first investment we make, we're going to struggle to get any more money. So the first one we make has to be rock solid, tangible, and then that will be used as a basis then to fund the other things coming forwards.
Yeah. One of the things that I often find when we're talking to investors is that historically investors are segregated according to quite fixed asset classes. So you're part of the bank that focuses on real estate. You're part of the bank that focuses on energy, and that typically means power, and maybe renewable power, and never the twain shall meet. And actually, when we talk about a living lab, And when we talk about hydrogen, because often it's about logistics and distribution parks and how they get ready with the right infrastructure for those that are using the parks on site, you need that collaboration. I mean, it seems to be the theme of today. You need that collaboration across different parts of these financial institutions. Do you feel like they have grasped that they need to be working across sectors, across different asset investments?
On the equity side, I do more with than the debt, but on the equity side, some of the investors have a very fixed model, and it is what it is. But there's more coming through now, smaller funds, where they're more interested in a wider scope. And that's probably where you're heading, I think.
Interesting. So maybe, Ian, if we turn to the other hat that you're wearing, the Freeport hat, we obviously sit on an incredibly exciting initiative, which is the Freeport's Hydrogen Working Group, bringing together all the different stakeholders to focus on something we've talked about today as being a catalyst for the supply chain, which is aggregation of demand. But I think there's probably a lot of people in the room who don't actually know either what the Thames Freeport is physically, or what are the advantages of a Freeport, particularly when it comes to this stage of growth that we're talking about, you know, early manufacturing and starting the export journey and all of that. Can you tell us a little bit about that?
So just to put a bit of geography around it, the Thames Freeport has three principal locations. One is the Ford Dagenham site next door. The other one is Port of Tilbury, and there are two other sites next door to each other at London Gateway, so Dubai Ports World, furthest port out, and a site called Thames Enterprise Park, which is next door to it. And within the Freeport, within those sites, there are subzones which have been allocated for customs freedoms and tax freedoms and various other things. So essentially what the Freeport is able to offer is the ability to trade without having to deal with customs, depending on where they are in the Freeports, but equally, more broadly across those sites, there are things like capital allowances, freedom from business rates, and other incentives which encourage people to locate within those sites. The Freeport is focused on has three main focuses. One is around innovation, which is clearly, this fits very clearly within that piece. So one of the real drivers behind the Freeport is how can we use that Freeport to use the great British know-how and ingenuity and innovation. How can we use a Freeport as a place to manufacture that and sell that to the world in a very compelling way? But equally, how do we use that innovation to support levelling up, going back to the previous question? Secondly, they've been charged with decarbonisation. So one of the other key threads of the Freeport is actually how do they decarbonise their operations? And again, that's another ripe area for innovation. We've been working with them really closely over the last year or so to actually, how do we tell the story as an investment proposition? So not as we need to shift all these trucks over to hydrogen, it's here's the commercial proposition around how you would deliver net zero in a Freeport environment, and telling that story in a very different way. So one thing that we've learned throughout over the last couple of years around the hydrogen piece is one of the key things we have to do is articulate that demand in a way that investors can respond to, and aggregating that demand. So going back to Barry's point earlier, we don't want to go to market and say, can we have 10 trucks please and do a small trial at Tilbury? We want to go to market and say, actually, we've got 6,500 lorry movements a day. That's just Tilbury. We know that over time, the local operators are going to start moving away from petrol and diesel because they've got to. This is what that demand curve looks like. How can we bring you to the table and invest in that and support that transition to net zero? So there's a couple of roles there that the Freeport can really, really drive. And I think equally, the last one for me is around how is driving that real economic benefit to drive levelling up as well. And early stage and initial stage manufacturing, first commercialisation is absolutely key to that, be it hydrogen or be it any other type of innovation or product, because that's where you're going to drive the jobs growth, that's where you're going to drive the economic value, and that's where you're going to eventually drive that prosperity of the Thames Estuary as a region.
Very interesting. I think we have a few more minutes maybe for audience questions, and while you're formulating them, I'd just maybe draw one conclusion from not only the work of the Freeport, but the conversations today about collaboration. I think from an investor perspective, they much prefer to operate in clubs. They operate in national clubs, and they operate in clubs around sector or technology specialisms. And so I think what the Freeport's done very interestingly is asked everyone to invest a little bit of their time and their resources, as well as crowding in some government investment, to work towards some very clear goals. And I don't know whether, David, you would agree that when it comes to trying to deliver on the Living Lab ambition, actually we're going to be much more successful in the long run in delivery, but actually we may be more successful in crowding in private sector investment if we are asking all those in industry that will ultimately benefit from a successful Living Lab to contribute a little, that fund idea, that clubbing together idea, to pull in investment. Do you think that is the way forward, rather than a sort of cornerstone, one name on the side of the...
Yeah, I mean, if you look at the most the successful accelerators in London, they're all ones that connect all the dots. So the founders, the investors, they give you the whole thing about how you do the presentation, and it draws money in from externally because the product that comes out is investable. So if you can get everything done, people will put money in because they know they're going to get return. Equity investors need enough people in the room to justify what they're going to do. About 10% of SMEs apply for equity, and about 1% of those get it. So the better presented and the better polished the outcome, the better it is for them. So they'll put money in if they think there's a return.
Very good. Any questions from the audience before we wrap up? I'm not sure who that is. Is that Simon?
That is Simon.
Thank you very much for the interesting talk. I think a question around investment. We talk about investment in terms of pounds and currencies. When is carbon going to become the investable risk and commodity? We'll stop talking about investment in terms of money terms, but in carbon terms. When are we going to see a transition to carbon as a currency as a result of what we're going through? This is a question, really. Perhaps.
I have my own view on that, but maybe David, do you want to
I don't have enough information to make a judgment.
That's a fantastic question. I don't know how to answer. I think you're quite right, though. I think it's certainly going to be a case. I think economic models are going to start transitioning in that way, but I can't see. I can't see how that route forward at the moment. But I think it's a really, really valid question, and I think it's something we are going to have to start to address.
I think from the perspective of the investors that we talk to, and that's industry and as well as institutional money, they see it as something that's counterintuitive as well as intuitive. It's intuitive because if you have a carbon price, you have a strong signal and you have a cash flow underpinning what you're seeking to do. So in that sense, in the absence of that, many of the necessary changes will not have an underpinning long-term stable cash flow. So yes, we will move towards that, and we are already doing so. But it's a no because it's just not how investors have historically thought about their skill set. They think in commoditized asset terms. I do solar, I do wind, I do oil and gas. So you're asking them to go from thinking about what's the physical thing that I know about in my little world to what's the optimal use of my investment for decarbonisation purposes. And that is a big step to take, but we're already seeing it in the market. Any other questions? Have to wind up. Well, thank you so much to my panellists, and I hope this has spurred some thoughts in your minds as to how we can deliver this opportunity for the estuary and for CEME.